Good afternoon, everyone. Hey, what's going on, Joe? I'm not. I'm not going to bring anybody up as a speaker right now until we get our panel established, and then we can go ahead and bring you up here and see what you'd like to say. But let us get our intros started and kick things off. We are starting a little bit early just to get the Twitter isms.
Dragon. Damn Twitter. Looks like we're going straight.
Hey, what's going on, Scott?
Oh,
Try
not
not to
much.
say too much during this space. I've been sick as a dog all week.
Oh, jeez.
Yeah, it's been a heck of a week, but can at least keep this open on some stable Wi-Fi and not let Elon and his Goonies hold us back. Hey, Aaron, just sent you the invite, uh, and I was just telling Moon I've been sick as a dog all week, so I'm gonna try to keep it relatively quiet and let y'all hold the space, but we'll definitely be able to keep it open on some stable Wi-Fi, so we don't have any issues from that standpoint.
Hey guys. Oh, welcome. You had obviously a few minutes while people filter in, filter out, um, and figure all that out. But holy crap, I haven't been on here. Last week I was super sick and I'm in meetings all week, so we got a ton to talk about. Um, if you were in the space this morning and the old Telegram, you got to hear about the road to 1 billion for Dexani and how to earn yourself some tokens via the airdrop that will be coming up as we get to $1 billion in volume. That's our goal right now, and you can do that either by trading yourself or using your referrals and getting other people to trade. So it should be a pretty easy way to earn yourself some. And speaking of airdrops, Arbitrum. So I know off and on, depending on if you're in any of the chats with me, I've talked about trading on Arbitrum, especially GMX. And, that because we in the industry and a lot of people anticipated this airdrop that's coming. So if you've been trading on Arbitrum prior to, I believe it's February 7th, you are entitled to the DAO airdrop. And Arbitrum.Foundation is where you can go check your eligibility. Pretty exciting. Literally all you had to do was interact and play on chain. And so, yeah, you're going to get yourself an airdrop. And this is a good way for these projects, these companies to, distribute tokens in the easiest way and still kind of keep it compliant as far as the overall regulatory piece comes and get these things out there. So pretty exciting for that one. It's been talked about for the last few months now of possibility. There's been lots of rumors surrounding it and whatnot. And Arbitrum came out with Arbitrum Nova and Arbitrum One, and they've gone through their own I don't know what the word is here, growing pains as they've built out this layer 2. Interestingly enough, you can now actually drop and crew create a layer 3 on Arbitrum, which I have not had a whole lot of time to dive into right now. So, but that's their jam, right? Scaling solutions for ETH, which Ethereum is the top dog when it comes to trading volume and overall usage. So, pretty rad. Definitely something to look into, right? Like when these new chains come around and stuff, you start hearing about them. If you get on there and just start interacting with them, do some trades on there, interact different smart contracts, a lot of times you can just earn airdrop, right? And you didn't really have to do a whole lot other than that. And that's kind of exactly how we have modeled a lot of what we're going to do with Dexani, is that ability to earn some, at least while we are pre-launch of the token, just for interacting, just for doing some trades, right? And this doesn't mean you got to go on there and do some like degen trades looking for that next level, whatever it is. You can go and trade over on Polygon and get yourself some blue chips, some wrapped Bitcoin, some ETH, some Matic, whatever, and trade back and forth with that, working with the swings in the market. It doesn't have to be anything wild and crazy. And I know everyone, a lot of people hear that, oh my God, 1 billion, that's such a big number. But the reality is just yesterday alone, Uniswap V3 did just about $1.1 billion in volume. And that's just V3. That's not including V2. That's not including any of the other chains, nothing. So reaching a volume number is not terribly challenging. I mean, let's say you only had 1 ETH in your wallet, right? And you're like, all right, I'm selling that at 1,700, and you rebuy in at 1,400. You're already at 3,100 now, and your balance never went above 1,800. And you can do the same thing with $100, right? Now you probably, if you're in those lower amounts, want to move over to a different chain, move to BNB, move to Polygon, something that's not going to eat up your gas when things happen. So, when looking at this, right, I actually played with Arbitrum Nova this morning for the first time because it wasn't one that I had played with on Arbitrum. And holy crap, that thing's impressive. It is fast and it is cheap. Cheap. I don't know what they're going to do to keep bots at bay when it starts to grow, but wow. When they say Nova, they're not joking. It's fast and it's hot. I was very pleasantly surprised. So, but we are modeling a lot of what we're doing off of that. We've seen success with that from other projects, whether that's projects like Optimism and whatnot. What's up, Scott?
So wasn't that the same issue that like the gas is being too low? Same
and this is
concept,
why you don't host anymore. You're kind of breaking up. There we go. Go ahead. Say it again. You broke up.
Didn't we see the same thing happen with Solana?
Oh, yeah, Solana, crazy fast, crazy cheap. They got botted as they picked up, and I have a strong feeling that Nova will kind of feel that same pain as they gain adoption. Because I'm telling you, I was wildly impressed with how fast it was. And I want to say my transactions on there this morning that I did, and I just did some real basic like ETH to stablecoin back to ETH. They were sub penny, and they were fast. So that's pretty darn impressive. Pretty darn cool. Just to see something that's running there be that fast. I mean, it rivaled Polygon by a lot. So, it's pretty impressive. But we're modeling a lot of what we're doing off of these proven strategies, like what Arbitrum did, what Optimism did, what Blur is currently in the process and working their way through as well. None of this decision that we made was made in a vacuum. It wasn't made without any without without any data behind it, right? A lot of these things launch, and we were guilty of it when we were still Excel, of not really spending the time with the data and information to do this. So we've gone back to that drawing board, and here we are, right? Using these proven strategies, these proven techniques to build this up. There was a lot that was put into the information of like, okay, what's worked in the past for other projects and what hasn't, right? Same thing with our referral codes. That's a strategy, and we talked with GMX, and even we talked with folks from Binance and from 1inch about their experiences with using these things, and well, they had great experiences, and it worked really, really well for them. We're still working through regulatory pieces, right? For some of the things we would like to offer in the future, but right now, with what looks like a freaking war on crypto, I have no idea. The closing of Signature Bank was a pretty heavy shock to the industry because there wasn't a lot of clarity given about surrounding it at all. Just that there were issues, and it's pretty funny to see people just accept that and not ask more questions, right? Because let me see if I can pull up exactly what they said. They just said like that there was risk, basically. And I don't know what that risk was. They won't say what that risk was. It's not transparent, so it's real hard to know exactly what it was. I mean, but Signature Bank is definitely one that was heavily used onboarding and offboarding with crypto, which is heavily why we started to prioritize this week our onboarding and offboarding of crypto that we're going to be offering natively within the platform, right? And so we've been testing that out. That wasn't supposed to come sooner. That was supposed to come later, but given these issues, we decided to prioritize that and try to get it rolled out and get all the contracts signed that are required for that and get it in there so that people can get it in and out as easy as possible. Now, anybody that's using that, I'm just going to say, like, hey, your regulatory piece and wherever you live, jurisdiction, and your bank is still going to be heavily weighed in on that. But I will say I tested it with 2 debit cards from credit unions, and I got 2 different providers for it to work with, which is pretty good. That's been a real heavy challenge for us. We've worked with some others in the past and working to kind of get this out there. So with all the bank failures and everything else, it just kind of makes sense to hurry up and make this thing a possibility so that people can make their own decision if they would like to be their own bank and hold their assets. I think that one of the largest fears here that has been consistently has been these depegs. And it was funny that everyone said that USDC depegged, and I was one of them, right? I will admit that I was like kind of freaked out when I saw USDC drop below 95 cents on the dollar. But then USDC or Circle came out and said, hey, we're still going to allow these withdrawals. We're still going to allow them. And so they did. And at that moment, USDC was officially repegged. Regardless of the price on the market, USDC was officially repegged because at that point, you could redeem one USDC for $1. And Circle guaranteed it. So that's pretty cool to know that that's realistically like how that worked. Because basically what that meant was you could buy $1 for less than $1. And there were a lot of people that took advantage of that. A whole lot. That took advantage of it. So pretty gnarly there to just kind of see that happen and really start to understand like the reality of what these asset-backed stablecoins actually mean. And it was funny to see, looking hindsight at the historicals, everyone freak out about this quote-unquote DPEG because USDT had been through this a lot, like an obscene amount in the past. And that's really where they were, right? They were just doing the same thing that USDT had done, and USDT still hang out there. There was a point where USDC was only 70% backed, which is kind of wild. But with that all being said, banks are basically just under collateralized stablecoins when you really think about it, right? If we look at what happened with SVB, basically $42 billion got removed from the market. And then, hey, shit, there's not enough money in the bank to handle all the withdrawals. So what is a bank? It's an under collateralized stablecoin. And I mean, that's heavily due to fractionalized banking, right? Fractional reserve banking, to be precise. But it was funny, I was hanging out in some of these bigger spaces. People were talking about that, and they were like, oh man, like you're a startup in crypto, and what about you? Did the SVB thing matter to you at all? And I was like, no, like I live on chain. Worst case, I just have to find a different way to off ramp, and that'll always exist somewhere. So just kind of another point of realistically like where this technology and this owning of your assets comes into play. Like it's there. So we look at these things and we get scared. But it's funny, the crypto world has been screaming about this. And yet, here we are. And everyone's like asking questions about banks when this entire industry in the space that we live in has solved this. Right? Like, and we witnessed it. It's crazy. It's fucking wild. So, it makes me more bullish for the space. And we saw that when we witnessed this DPEG, quote unquote, right? We watched your standard blue chips, Ethereum, Bitcoin, etc., pump, and boom, there it is, right? We've got this opportunity. We watch them pump, so we know that some people are looking at it and understanding like the reality of the space, but we still have a long road as an industry, like quite a bit. And I'll keep chatting in our main Telegram chats, kind of talking about a little bit of this, and also covering, some of these conversations and some of these things that are happening. It is funny. There's been rumors, so now that Signature Bank is up and running, or not up and running, but up for sale, that there are rumors that to buy it or to get into it, you had to divest of the crypto products. Now, these were not entirely verified, so I can't, hold to that. But that's what they said. And now the New York Department of Financial Services is saying it had nothing to do with crypto. But I still have a lot of questions. I still kind of wonder if that was, why it was there. But they still haven't given a reason as to why it was closed. And that's super concerning. Oh man, did we just lose everybody? Did the space just rug? Oops, there we go. Did you guys just get kicked out? Everybody kicked out?
Seems that way. I've been able to hear you the whole time.
Okay. Weird. That's freaking wild. Yeah, it was like there's a bunch of people on, and then all of a sudden they're gone. So, anyways, you know, anyways, we've from a Dexani standpoint, we've been putting the tool and the product in the hands of more regular traders, people that are trading at least 10, 20 times a week, if not more. So we've been getting a ton of feedback there, right? Like, and I'm in all these chats with some of these, alpha trading groups, these DeFi trading groups, getting the feedback as to what they love, what the scanner shows and whatnot, and then working with them heavily as to how are they using this, right? Like what are they looking at left and right? What is their jam? And the traders that are trading the bigger, higher end tokens, they heavily look at volume, but they're using it the ones that are identifying larger volume stuff are using it to identify things like, are there malicious holders, right? Because that's something that no one else shows. No one else tells you if the holders, the liquidity providers, the owner deployer is a part of this. So I don't really know of anything else that does that. And then when they're trading the lower cap stuff, they're using it to identify any malicious code ahead of time before they get in, or even watching for activity while the contract is going. So it's pretty interesting to see. And it's neat to see because they're asking me a lot of questions, and that's helping me to really address some, ease of use portions of the product. Right. And so one thing that is coming, and I know I keep saying this, is little short 30-second videos for each of the things. Because that's just kind of an important thing. Now we did introduce, and we're gonna the AI person or the AI assistant. We've been loading that up with more information as you guys are asking for it in there. So, oh man, somebody just said the Twitter Spaces link is not working. They just sent me a text. Huh. Oh man. That's so weird. I wonder if that's why we're having these issues constantly. Why are Twitter Spaces? Why are the Twitter Spaces doing this? Especially to us, so annoying. Let's see. I'm gonna send them a direct link, and we'll see if they're able to pop in. anytime soon. Because if not, I'm wonder if that's why we've been getting such weird um interactions here. And I don't know what that means. So super weird. Yeah. Let me see if they're able to get in. Maybe we're just not cool enough to get like priority or something. I don't know. Let's see. Where are they at? Yeah, weird. It looks like the links are broken or something. Damn it. Why does Twitter Spaces keep rugging us? Everything is rugging. All right. We went to ETH Denver. We had a metric ton of VC speed dating, as I will call it, while we're in our seed round for equity in the company. And then we come back and we're making all our intros and everything else. And we're setting up all our calls. And then the bank that most VCs have exposure to, literally 50% of VCs have exposure to SVB. Just decides to become insolvent, which is kind of ridiculous. So I don't really know. Like it feels like we're just consistently. It seems like every time we get somewhere, we're getting something pushed in our way. But that's all right. We just keep moving. We find solutions, and we keep moving forward right now. So we're just gonna keep doing that. But this whole bank thing is a pretty serious problem, to say the least. At least somebody will be able to listen to this recording afterwards, I hope, if it's even actually recording. Who knows? Because, yeah, we're just like kind of hanging out here. So, oh man, let me put this other thing on mute real quick since it just keeps making annoying noises. Mute notifications. Cool. All right. The bank thing's a pretty big issue, to say the least. But I don't know what anyone else's thoughts. I think the FDIC did exactly what they should have done. Getting in and out of all of this issue, right? They basically said, look, those that put what do you want to call it? Those that deposited their money, you guys are covered, right? Which I think was exactly the right thing to do, right? Just hey, those that put it in there are good to go. So,
Hold on, Aaron. Can you hear me okay?
I can hear you.
I guess it looks like it's just a two-way conversation, but space is recorded. My biggest thing with SVP or SVB and the fear that can't be solved with decentralization versus centralized, real banks versus crypto is just bad actors. You know, the day that they announced, or the day that the FDIC took over, bonuses were paid out to execs of a failing bank. Not necessarily tied to a failing bank, but top execs, including the CEO, selling millions of dollars of shares in the months leading up to the collapse. Stuff like that is what's fearful. Now, that doesn't separate the either space. It doesn't make either space more appealing than the other, because even in the world, you can have bad actors have influence. The other thing I'd like to point out that can't happen in decentralized space is this idea of supporting the U.S. government, for instance, and buying treasury bonds that become useless. Because in the decentralized world, we see it too often is if you can't hold your own in the space, we're just going to let you fail. And, next guy step up for the most part. So kind of curious about your opinions.
Yeah, I mean, the decentralized space is the Wild West, right? It is dog eat dog, 100%. We get, we definitely have it harder than anyone else. They will let that space fail, right? There's just not enough adoption, enough faith on it right now to allow it to save it. So, you know, it and it's a hard space, but we have an entire system that's built on debt, and that's ultimately what's really terrifying about all this. I hope I'm kind of answering this question right now. So, like, I kind of dove down a bunch of these products that exist out there in the blue chip world of like structured financial products and debt products. And like honestly, like the more I dove down it, like the more scary it really got, because everything is held up by this Jenga of debt. We buy debt, we sell debt, we collateralize debt, we use debt as a way people can buy it and make it. Just doesn't make a lot of sense. But it's literally how the system works. And the further you dive down that, the deeper and darker it gets, because you really start to realize like just how truly fragile the system is. The system is extraordinarily fragile and scary. And that's very worrisome, because exactly what we just saw happened. And it can happen worse. It can happen at any bank, realistically, right? Like people want to talk about, all the big banks, like JP Morgan, Chase, Wells Fargo, and all this and the other. But if we continue down this path of our fractional reserve banking, like these bank runs can happen anywhere. Like there's no bank anywhere that I know of, with the exception of some of the special depositor banks out of Wyoming. Kraken Bank will be one of those when they open, that hold everything basically 1-to-1, right? They loan your money out, so it's not there. Anybody that's watched It's a Wonderful Life will remember, and it's one of my favorite scenes. It's Jimmy Stewart, and this is during the Great Depression, and he runs a bank. And this is where the term bank run came from, actually. Back in the day when you actually had to go to a bank to take your money out, when this reality kind of set into society, people were literally running to the banks to take their money out, hence the term bank run. But he's in the bank, people are trying to withdraw all their money out, and he's like, well, we don't have the money. The money's in Fred's house, the money's in Ethel's house. And people are like, what do you mean my money's over there? What do you mean my money's over there, right? Because they're loaning this money out, earning interest on it. And that's how the bank makes money, but it's also how our economy works, right? It's how we have money to loan out. Because the only other way to loan money out, and we still do this though, is to print money. And then the banks or the feds give it out at a particular interest rate to the banks and allow them to loan it out. So we get stuck in a real rock and a hard place of, we either continue with fractional reserve banking and, we sit on this tower of Jenga blocks that is just asking to be pulled out from underneath it, or we print more money and we require banks to hold things 1-to-1. And I don't know what the solution is there. I don't know what other people's thoughts are on that. We got those treasury bonds, which is essentially, you're buying U.S. debt, right? And I guess you could do maybe do loan bonds, right? Where people could invest their money into a bond that can be loaned out to someone else to do it, and you can get a return on it, and that's managed by the bank, right? Those funds exist, right? But then you don't have access to anything other than the interest, at least until they mature. So you do kind of get stuck in a really interesting place of how do you make an economy run without debt? And I don't know what the answer to that is. I'm not a world-class economist. I know it's really, really scary, right? But I also think that everything the FDIC and the government did, as far as these bank bailouts right now, has been hands down exactly what they needed to do. Right? You deposited your money in the bank, expecting that the bank was able to have your money to pull it out. We're going to cover that. You invested in the bank. You're an investor in the bank. You are the bank. Yeah. We're not covering you. Fuck off. I think that that's okay. I think that's acceptable. I think that was the right way to go about it. There's still a lot of questions surrounding a lot of things that go on with SVB. And it's a little sad because for those that don't know about SVB and what SVB did or does do, they specialized in startups, in particularly specializing in tech startups, to be very, very exact. And what they would do is most tech startups are not profitable for quite a while of their lifespan, right? Which doesn't make a lot of sense. But the thing is a lot of these products and a lot of these things that get built, they're not profitable until they reach scale. And that requires a lot of users, a lot of transactions, etc. to happen. So a lot of these operate in the red. And it's just like the nature of any tech product to be like that. Not everything is a ChatGPT. Facebook took over 5 years before it made any money, right? They just kept growing and growing and growing and get bigger, right? Famously, FedEx took almost 12 years before it became profitable. Reddit was 7 years before it became profitable, right? So this is a very normal thing, right? For anybody that's might be listening, kind of freaking out at this crazy concept. And so what SVB would do is you could take out lines of credit on equity in your company. And you could literally just take out lines of credit on that. And then, at a later round when you raised more money or when you became profitable, you could pay all that back and get it back at cost. So there were a lot of startups that are living on that. That's what they had to go on, with the expectation that this is a bank. Banks don't fail. Why would a bank fail, right? Which is a reasonable assumption. Let's make sure that we're 100% clear on this. That's a reasonable assumption to make, that the bank is doing what the bank should do. They're regulated, they're accredited, they've got all their certifications and their charters and everything else. Right? It's a reasonable assumption that that's what's going to go on. And the other part is that a lot of these VCs and private equity that these banks used, or that use this bank, would require their startups to use that bank for a lot of these same reasons. They would, the bank also gave out loans on equity, right, to founders, right? You could take a loan out against the equity in your company to buy a house, right, if you wanted to. So, they were living on that. Now, we don't know what's going to happen to those startups, right? We don't know what's going on with those debt products that they created there for that. and it's risky, right? Like, let's be very clear that this is still a risk thing, but everything's a risk, right? How mortgage-backed securities, that's what SVB bought. They bought treasury bonds and mortgage-backed securities, right? Like, some of the mostly mortgage-backed securities, but like some of the most stable products in the market, right? Like, SVB didn't do anything insanely egregious, right? Like, they weren't wildly irresponsible. There are some things they should have done. They should have taken out insurance and whatnot on a number of these things, right? That they didn't do, but they didn't like go and put this money into anything wild. They had it in like 10-year T-bills and mortgage-backed securities, like things that are historically very stable. That's exactly what they were in. Did I drop off for you guys?
No,
Okay, sorry, I got like a phone call. Um,
I get that these things are stable, but interest rates weren't going to stay zero forever. So how did it even make sense to continue to buy those bonds? Now, I get everyone is doing it.
okay, so
And pushing it.
yeah, so investors and banks expect returns on money. And so one of the hazards of printing money is that more money is out there. So investors deposit, so a lot of money got deposited into SVB. And they had to basically go invest in something, right? So they picked something that's historically stable, right, in order to satisfy the investors. Otherwise, that money's just sitting there doing nothing, losing value because of inflation. And it is a natural hazard of our market and our world to expect that profits will always exist and that banks will make a profit, or at the least not lose a bunch of money. And so they made the decision to put it into stuff that was less risky, at least historically, which was fine. But then some people withdrew $47 billion out of the bank and left a big old hole in their liquidity. Big old hole. So, I mean, it's just kind of where they got stuck at, just trying to do basic good business.
No, I mean, that does completely make sense.
I mean, yeah, it's like, it's super shitty because they didn't actually do anything that wild or crazy, like, which is also what makes it that much scarier. Um, and so I don't really know what's going to happen. I think if the Fed continues to do what they've done, they're going to do it. They're doing the right thing, and that's a pretty big positive for everyone. So, um, they're bailing out people that had a very reasonable expectation, which was, I put my money in a bank, I can withdraw my money from a bank. That's a very reasonable expectation to have. They weren't out there gambling with it. So, but they're telling the investors to go fuck themselves. Investors took the risk. That was a great decision. Why they closed Signature Bank, I don't know, and we still don't know. There hasn't been a good answer on that at all. But I onboarded and offboarded some crypto the other day, so we know that everything's not completely screwed. I do think what we're going to see from the crypto space, though, is different centralized exchanges, crypto.com, Coinbase, etc., buying banks, buying bank charters, right? So that they don't have to run into this issue of relying on these other places that may or may not get shut down. Because of the industry. So I'll be curious to see who the first one to do that is. I imagine it'll be Coinbase. And maybe Circle will own or be their own bank. There's still a lot of questions surrounding USDC. And is USDC a security? Which is going to be a very interesting one to see how that plays out. The argument there being is that USDC holds your money in dollars, but then they put the rest in T-bills. Now they're short-term T-bills, looking at like 3 months type of stuff. But that's kind of how they make their money. And then if they're managing that, deciding where to hold the money and this, that, and the other, then that kind of could make them a fund manager. Now, my argument there is USDC creates a product, or Circle creates a product, USDC. And that's what they're getting their interest to do, right? Is to maintain that product. And when you use or buy USDC via dollars, like, you're getting that product. So they're a service provider. That's my argument, at least. I don't know. That probably wouldn't hold up anywhere, but that would be mine. So I don't know. Things have gotten even wobblier with, people freaking out over that USDC stuff. To tell you like how much so, on I think it was the 11th, Uniswap did $11.4 billion in volume. 11.4 Uniswap V3 billion dollars in volume. It's crazy. It's our highest ever. And the thing about decentralized exchanges is that's like 90% real volume. It's not market maker volume. Like, not the fake stuff you see on the centralized exchanges. Like, that's real people volume. Just fucking insane. Right? To see that. That's wild. Just to watch that happen. So I don't know what the answer is, man. Like, I really, really don't. Unless we can get out of this, some way out of this habit of risky debt products and just literally living and running an economy on debt. And yes, the US dollar is a debt note, right? I mean, the dollar is debt in and of itself, right? You're spending debt with that, but that's a whole nother conversation. So it's kind of scary. But to transition topics, just back to kind of some of the Dexani stuff and what we're seeing there. We've been adding scams at an alarming rate the past few weeks. The most prevalent one that we have recently seen is what I'm calling a delayed honeypot. And it's really interesting because it's designed to go around the scanners. And you, when looking at it, believe that it's safe. You'll see a renounced contract, so you assume they can't change anything. But within the contract itself, there's another contract address it calls, and that contract address controls or adds or inputs some variable somewhere within the contract that determines whether or not a transfer can happen. And the kind of scary part about that piece is it's really, really challenging to scan for. Even within looking in the contract code by hand, the first one took me a good 6 hours to figure out what was going on and why it was happening. Now I can find them relatively quickly, but figuring out a way to do this programmatically is going to get really challenging. And so you've seen the AI bot that's in there answering questions and able to do that. We're going to start working with that as we get through this funding round and further down this road to $1 billion to build out more AI neural modeling to help detect these things, because like this one is really, really wild. It allows transactions and transfers to happen in the same block, so you can buy and sell in the same block, and even 1 to 2 blocks later, even after they turn into a honeypot. So it's bypassing a lot of scans. And the next part is that they are keeping it live long enough for it to look good. And some of them even allow the whitelisting of addresses. And because it's using another contract to determine that reality of if it's okay, people see a renounced contract, assume it's all right, and they don't realize that this other thing is happening. And the biggest problem with that whole piece is they're not inputting that in the same place in every contract. So I saw one where there was a variable that was required to reach a specific number, and it called that other contract, right, to validate that. And then when they were just ready to make it a rug or a honeypot, they literally just sat there and turned it off, right? And then there was another one that was designed for what would normally be called like a trading delay or a trading cooldown. And they had it set at like 5 blocks. And then they set it at 5,000 blocks. Way out of reach and before they were going to rug it. So it's a real challenge to keep up and figure these more complex ones like this out and build out a programmatic way to scan for them. So working with we've been working with some of the GPT-4 stuff now that that's out. They gave us some early access to some of the GPT-4 GPT plus stuff to try and figure out a way to continuously build models around this thing and around this, because I don't really know how to programmatically check for that one without doing just a shit ton of transaction modeling and validating any other addresses that it's adjacent to being smart contracts. And the other piece is that those smart contracts are unverified, which means you have to decompile them, run all the method IDs and whatnot behind that. So super interesting, honestly. And what's sad is that like it could be like a really valuable tool, right? And like we've talked about before, a lot of these scams and stuff, they come from the space and the world of being used for positive, being used for good. If you don't know the humans behind it or have faith in them, then like they can be used very maliciously. That's why we give warnings like we do. But either way, right? You can just stick to blue chips if you want, right? There's still trading to be done there. There's still acquiring to be done there. And that'll work. So yeah, it's a weird time. We've got about 7 minutes or so left. The next thing I kind of wanted to touch on was the future of the market and just kind of some general predictions. Generally speaking, April is a bullish time for crypto. I don't think that this is actually going to be that different of a time period. We have CZ, who is currently looking to take $1 billion and dump it in there out of their stablecoin fund and get away from stablecoins. At least that's what he said. So that's pretty bullish, to say the least. And if that starts to happen towards a pretty typical time frame, then it could be a good catalyst to see kind of a bullish market return, which would be really, really nice, to say the least. So I'm still bullish. I'm all in. I live on chain. We need to make it easier for people, and that's kind of our goal. So pretty rad, though. On another note, I guess we also haven't talked about the new Uniswap Universal Router. So we integrated the Universal Router and all new gas calculating processes. That was one of our biggest limiting factors before, was processing and determining gas units before. And now we're plus or minus 0.5% to Uniswap for gas through the Universal Router. So that's pretty exciting. We were seeing some failures early on, especially amongst some of the more degen coins that were using just a ton of gas to run through it. For those that don't know how gas versus gas units works, you can ask Danny. That's what we're going to name the AI bot. But basically, every function that has to be read or run through by a token increases its gas cost immensely. And so some of these more crazy ones, especially liquidity ad ones, they use a lot of gas. And calculating that is a super pain in the butt, to say the least. But out of the last 100 trades, we had 2 failures, both on BSC. And it looks like from those, it was just somebody trying to buy something with extraordinarily low liquidity. And it just wouldn't let you. It's kind of the nature of the beast there. So, doing pretty well overall. We think we've got all that kind of handled out. And hopefully by or before this time next week, we will have fully functioning fiat onboarding and offboarding. So, yeah, pretty rad. Pretty rad. And then we can all stop worrying about centralized exchange shenanigans and trying to find our banks that'll let us do this stuff. And the one thing I will ask of kind of the community and everyone is, like, as you figure out what works for you. So right now, for me, it's Simplex and Transact, and that's via credit unions on debit cards, and I'm in Washington. So for me, that worked. We'll get some more. We'll get them up there, especially for our overseas guys. In theory, we can support up to 200 different countries, which is pretty sweet. And then we can stop and get off this centralized exchange. I don't know. Having to worry about them locking things up, telling you what you can and can't do. Hopefully. So, but we're about 2 minutes from the top of the hour. So I'm going to kind of call it. The spaces are doing something weird. I don't know why, but I know some people are trying to join via the link and they haven't been able to. So we'll have to figure out what's going on with all this in the upcoming weeks, I suppose. But I appreciate everybody that did show up, that was able to get in, that was able to access and get through this. I love you all. And I'm going to try and host some more of these If you aren't following me, follow me. And I'll probably just start some on my own randomly here and there. And if anybody else wants to just start one up and just bullshit back and forth, I'm 100% down for it. Just let me know. Shoot me a DM here, a DM in the Telegrams, and maybe we'll find a good time to start one up. Y'all have a good week.
Hey, have a good one, Aaron. And if you want a good laugh, check out Elon's tweet from about 45 minutes ago
Oh,
about the
boy.
Starbucks.
I'm excited. All right.
It's just run on Starbucks. It's kind of funny.
Oh, man.
Have a good one.
All right, guys. Take it easy. Bye.